Thank you for being here. Before we begin this panel, I was thinking as you guys could talk about what greenbacks are and what role they play in the entire climate finance ecosystem to sort of by set context.
Sure. So maybe I can start since the cases with the conventional green bank. We as a Montgomery County Green Bank are the first county-wide green bank in the country. Um, each green bank is set up and structured very differently. But the way that Montgomery County Green Bank is set up, it was started by the county, but it's a 501c3 no profit. So it was started by the county, but it's independent profit. And we are funded by the county on an annual basis. And our mission is to leverage that funding and work with the private sector to attract more capital, like First Bank, for example. There are many other green banks in the country. There are state-wide green banks like Connecticut Green Bank, that is a state-run. There is a DC Green Bank that is part of the district of the Columbia government. There's a New York Green Bank, which is part of New York state, which is the largest one in the country. And there are many other nascent green banks, close to 50 probably now, that are focused on the climate finance. And, they're either a nonprofit, yeah, can it be for profits, or they part of a public-private partnership, or just part of the government.
Yes, I'll contrast a little bit with what Rokas shared, which is the traditional model for an infrastructure green bank. Like you said, it's nonprofit, typically some kind of public funding or quasi-public funding. My bank, First Bank, is like what you all probably traditionally think of as a bank. We're FDIC insured, full service bank. We do things like home loans and SBA loans for small businesses. But we do everything through the lens of environmental and social impact. So that's what makes us different than, any other major bank that's out there. So the opportunity for us is we were founded in Florida, which is not and the easiest place to found a climate-centric bank, but it is a place that has a lot of problems related to climate. And we serve customers nationwide. People open bank accounts with us. Those bank accounts, the deposits in those accounts fund our ability to issue loans. And then we do loans out into the community into things like renewable energy, so solar, battery storage. We do building retrofits or green building construction, so buildings that are built to green standards, so it's greater sustainability, both residential and commercial buildings. And then we also touch on things that are outside of climate focus, but focus on social impact. So areas like affordable housing, early child education, healthy food, providing healthy food options in food deserts or in urban core areas where there's, limited options, and then funding education and nonprofits as well.
All right, thank you for that. We'll dive into our first set of questions, starting with you, Chris. How do green banks serve as catalysts for breakthrough innovations in the climate sector? What role do they play in pushing the boundaries of what's possible?
Yeah, so when I talk about green banks, just to be clear, I'll be referring a lot to like Montgomery County Green Bank and others like it, not my bank, which is a traditional commercial bank. So green banks are really important. The reason is, if you've ever gone into a bank for a loan, it's not always easy to get a yes right away. There's hoops you have to jump through. It's harder for certain types of companies, such as startups, to get those loans. And the reason for that is regulation. So for banks to have FDIC insurance, which is important to them for their existence and their ability to grow, they have to maintain certain underwriting standards, the criteria by which they issue loans. That can be a good thing for the safety and soundness of that bank, but it's a bad thing for innovative startups. Innovative startups sometimes struggle thanks like things that are predictable, boring, kind of cookie cutter. So how do we work to promote innovation as in an area like climate, well, we rely on green bank partners like Rokas's bank. And the reason for that is that they're funded differently, they're regulated differently, and they're able to provide, I'd say primarily, I would divide it into two areas. Either they're able to help us with concessionary rate capital, meaning loans at a lower interest rate, which can be blended with our market rate loans to provide a lower interest rate that's more affordable for a customer. Or if it's not concessionary capital, the other thing they're able to do is they're able to sometimes provide lending on companies that are earlier stage or ventures that are earlier stage. So there isn't quite as much of a track record, or maybe the industry or the model that company is going into has less of a established history in the market. So we want to leverage the abilities of green banks to be more flexible on things like that.
And just to add, so as a green bank's role is not to crowd out the private capital. Generally when we're mission based, so when we get a transaction, if that transaction can be done by a local community bank or national bank or CDFI, by all means, we refer and support that transaction to be done by someone else, because leveraging our capital is one of our missions as well. Our role is really to de-risk the transactions where conventional banks don't feel quite comfortable, or they do not know how to underwrite solar or renewable energy or energy efficiency transactions. That's where we can come in, we can underwrite because we have that expertise. And when the transaction stabilizes, we can sell that transaction or participate out to a private sector. So that's kind of the mission that we're in.
All right. Thank you for that. So green startups face unique challenges today. So how can green banks empower that next generation of green entrepreneurs and help them thrive in today's dynamic market?
There's two different ways I would say, and this again, green banks and also private banks that are in the climate space. One area sometimes is just that technical expertise, and a lot of it depends on what the startup is and where they're coming from. But sometimes there's technical experience that can be provided either by a green bank or by some community partners that the green banks are able to leverage. I always look at green banks in communities across America as like the boots on the ground. They're the closest to that local community, and they have the greatest understanding of the needs of the community and also the other programs that are available. One of the hardest things in the climate finance space and in climate tech in general that I've seen is if you're building solutions at scale, that are serving a global, national population or whatever, you can paint with broad strokes and things can be somewhat standardized. However, when you start to look at how those solutions, those technologies impact specific communities, municipalities around the country, everything is won and lost on understanding that local market. And it goes beyond the typical business understanding of a market, meaning like demographic understandings and commercial need assessment. It really falls into understanding the types of programs that are available, the cost, things like the cost of energy in that market, the emissions issues in that market. If you're focused on something that's dedicated to, the decarbonization. So you really need to rely on local partnerships for that. I think that's one of the big roles that green banks can play in those startups, is being a resource. The other piece, like Rokas mentioned, is sometimes they're finding opportunities that, that it's a, local startup or something like that. The green bank isn't necessarily designed to be a startup lender. That's really what I think mostly, Rokas, correct me if I'm wrong, but I think most of your focus is on infrastructure solutions around climate finance.
Yeah, that's right. But also a good point about boots on the ground, the green banks, because they are so embedded in the community, and the resources that we have, such as like technical assistance, um, we we can provide to to small businesses, property owners. We can help them identify grants, utility incentives, um, state subsidies. There's so much money out there that sometimes people just are not aware about it. When it comes to energy efficiency and renewables, and even small businesses in this space, that green banks have the access, all of those contractors that uh, can help find see monies available, and sometimes we subsidize the cost of that.
Yeah, so like perfect example of that actually. So a real like example that I think is rolled out in the last couple of months with a partnership we worked on in Montgomery. So Florida Bank, right? We're dealing with stuff all over the country, but we've developed this relationship with the Montgomery County Green Bank because we've developed a few different pilot programs with them over the last year or so. Most recently, this was a good example of, I think, your team finding an opportunity and putting the right partners together. There was a allocation of funds, I think it was at the county government level for the food truck program.
That was a state grant that county government received.
So state grant goes to the county government level. And the funds we were able to allocate those towards electrification of food trucks. So if you've gone to a food truck before, trucks are still gas powered, right? But when they're parked, they are using a generator, and they're making lots of noise and pushing out a bunch of exhaust that nobody wants to breathe in. And so, how do we tackle that problem? So Rokas came to us because Montgomery Index said, well, we have this funding. We need to basically bridge the funding for this project. But we can provide this very, very low cost, almost no cost loan to the food truck operators to electrify the trucks. The challenge they had is that the Green Bank, it's classic, public funded nonprofit, in that they don't have a lot of staff, right? And they don't have maybe the ability to build technologies to scalably deploy loans. That was something we had. So our bank, we own a fintech business as well. That business has developed solutions that allow us to deliver, for example, consumer solar loans at scale. What FEMA, who's here, her team has originated over about 4,000 consumer solar loans with us. We close about 200 a month with a team of 3 people. And we're able to do that because of the technology we leverage. So we took that same technology, we adapted it a little bit, and we made a simple application process for the application and closing loans for this food truck program. Rokas' team also identified the hardware manufacturer for the battery solution that we would use. That was a battery that was designed for food trucks, mobile homes, or motorhomes, any properties, projects like that. So we were able to bring them in. And then the last piece we had was that we needed the electrical contractor to actually do the installation. Once again, local market experience. So Rokas and the team at Montgomery County Green Bank facilitated those introductions. We were able to qualify those contractors, make sure that they had the right experience, good history, minimal complaints, public complaints and things like that, to show that they were going to do good work. And then we put a program together, and now we're starting to see that uptick for these food trucks. I forget how many, but there's a decent number of them. 25 food trucks in the first pilot that will be converted to electric. So all of that happening through Montgomery County Green Bank, having those local connections, and then just bringing in the right partners from all around the country. I think Tool, the battery suppliers out of California, right? We're out of Florida, and then find local contractors and funding at the state level, put it all together.
All right. Our next question. The market is rapidly evolving. How can green banks help businesses seize new opportunities while ensuring they remain adaptable to changing market demands and climate challenges?
I think the market, everything's evolving right now. So everything is in flux. I think we all tells each other with that. That's a big challenge. But I think from green bank level again, and I hate to repeat it, but it really is just about understanding what the needs are at the local level. And again, that's why green banks exist at state and local levels, is because you can't really, it's really hard to do something and successfully scale it nationally. Yeah, we have, through GGR at some of the coalitions that have been formed, but the design of those even is exactly that. It's a coalition. So you look at like Coalition for Green Capital, which is the national green bank, right? Uh, that's a consortium of I don't know, it's 50-ish, maybe 30 to 50.
Yeah, it was just about. I think green bag concept is not new. It's we're actually in United States behind on that concept. I think the first green bag was in the UK. There's in Singapore. So there are many green banks that are well established internationally, and this whole green bag concept is relatively new in United States. I mean, even with us, we were established in 2016, but we were not capitalized until about 4 years ago. And I started just about 4 years ago with Montgomery County Green Bank, where it's $3 million deployments, small startup, essentially, like the fifth employee, and almost 4 years later, we are about to hit $250 million in the project finance, and we're about 18 people now. We started with one partnership. We have work with other nonprofits and the vegetable banks like Climate First Bank and CDFIs. We probably have 2 dozen partners where we can leverage and educate them how to do the climate finance, right? Because the big problem with the climate finance is that most of the conventional banks, credit unions, even some of the CDFIs, they just do not understand how to underwrite those types of transactions. They just have no knowledge because they always had this one credit box, right? And it's affordable housing, uh, car loans, kind of cookie cutter transactions. And now, like we got solar and energy efficiency, and fleet electrification. Now adding resilience, and you add resilience, and the head starts blowing off of these bankers. Um, so the climate finance is relatively new, and it is challenging, I think, for the markets, conventional market as a whole, to get into that space, just because um, they don't have people that understand that markets, right? And because it's new, um, it is challenging, as you could probably relate to.
Yeah, I think also it's important to distinguish that, because we're talking about what green banks do, and then also tying this back to the startup environment. It's important to understand that what green banks are doing is more at the program level. So when we talk about a startup, that needs like working capital and funding for the R&D period, pre-revenue finance or pre-revenue funding, that's still coming from sort of traditional sources. I mean, it's either being bootstrapped by founders, or they're raising capital through venture. Maybe you're able to find some impact funds that are interested in getting in at the pre-revenue stage. When you go to a green bank, or when you start to look at a green bank for partnership, it's going to be more of the programmatic level. So maybe as a founder, you've developed your MVP and you're ready to put it into work, and so you identify a project in a local market. That's what that project, is something that ties back to whatever the mission is of that green bank. So study who the green bank partners are around the country. If you're working on a startup endeavor right now, and you want to figure out what might be the right market for you, look at what the green banks around the country are doing. Find green banks that have a mission that aligns with how your product could be utilized, some sort of program. And then that's when you want to go to that green bank to pitch your program. So it's not necessarily like you'd be going to them for startup funding or working capital, that you would be going to them with a program that puts your idea or your product into play. And that's where Green Bank, I think, can help, because they're going to be a little more open-minded to maybe if a first time endeavor for a new startup, but you do have to have something in place already. You're not necessarily going to them for like the working capital facility or something.
All right. Thank you for that. Turning to Rokas for his insights. Rokas, how can greenbacks support the scaling of climate innovations beyond traditional energy sectors?
Constantly in evolving and working with entrepreneurs and new technologies and learning, um, and adapting to the needs, because that's what's going to create the impact. And as a mission-based organizations, as we are, um, we always look what is the impact. So as long as there's an impact, and that helps, uh, in our case, helps the county to decarbonize, and if your technology or startup is gonna help to do that, we want to look at it and we want to learn. And and just like any other being bank, I think they're all open to it.
What exciting opportunities do you see for innovation as growth in sectors like agriculture, transportation, and waste management as they relate to climate solutions?
Yeah, doing your uh, renewable uh, transaction is not innovative anymore. Energy efficiency is all also kind of becoming a um, mainstream to what we do. Uh, Fleet electrification, EV infrastructure, also not new, but what we find uh, where we have a lot of opportunities is in the resilience, um, like uh, water, uh, nature-based solutions, and some of the infrastructure that we are looking. I think that's really exciting, and it's relatively a new space for most looking banks. Um, so yeah, we hired the type of person just to do the resilience finance, and we're working with the county and some of the municipalities to pilot some programs, flood mitigation, things like that. It's very excited. It's a brand new space, and we learning as we go as well.
Next question is, as we look ahead, how can greenbacks help businesses not only grow, but build long-term resilience against the impacts of climate change and market shifts?
So when we look at each transaction, we underwrite the impact as well. And when we underwrite that impact, we look at the resilience as well. And maybe this is a bad question for Chris, if you want to add anything. Uh,
Yeah. So I repeat the question again. I just want to make sure I capture everything. So yeah.
How can greenbacks help businesses not only grow, but also build long-term resilience against the impact of climate change and market shifts?
Education is a big piece, right? So, I mean, that's for us again. It's understanding we're going to come in with, like the way that we feed off of each other is important to understand. So we're coming in with private capital solution to a community that has limited funding. Rokas's Green Bank, an example, they're all similar in that they all have some annual budget that's allocated to them. Once that's used up, it's gone. Um, they want to stretch those dollars as much as possible. You mentioned resilience. You're the resilience person on our business team, and I've seen that with a lot of green banks around the country. That is definitely what I would call a more cutting edge area, because the truth is, like, we haven't figured out how to help with that from a financing perspective yet. It's still too like uncharted to us. We haven't seen any product or business model developed around it that can be monetized. And we are, as much as we're a bank that's about environmental and social impact, we're a for-profit bank. We have to do things that we can figure out a way to monetize. So we really look closely at what the green banks and some of the other just community organizations around the country are doing when it comes to resilience is one example. The other piece to that, though, is where we're needed. So you can identify opportunities in your local market that you might want to engage in Rokas, but don't have all the capital that you need to do it. And that's why, like you mentioned, you worked with a variety of different CDFIs, community development, financial institutions, also with commercial banks like ours that are mission oriented. And I think sometimes even with other nonprofits in some cases, right? Even green, I think you've partnered with the green banks.
That's right. Yeah. No, we particularly, Montgomery County Green Bank, we get 10% of the energy fuel tax on an annual basis from the county. So that's equals about between 18 to $22 million appropriation on an annual basis. So our mission is to take those funds and leverage them 4 or 5 times, right? So we get $20 million, we need to make $100 million. And that's where the private sector comes in. So if we have a $10 million transaction, we might put in $4 million into $2 million, very subsidized rate, depending on the impact. If the impact is high, the greater the terms will be. But then we try to pull in other nonprofits. We work with, nonprofits like Inclusive Prosperity Capital, which is a spinoff of Connecticut Green Bank. We work with New York Energy Efficiency Corporation, LICE. He does a lot of business in this area as well. We work with CDFIs, like a formerly owned Virginia Community Capital, now Locust Bank, for example. And we pull in that capital to make that $10 million to deploy. Now, the private capital comes in at the market rates. Our rate is subsidized. So the user that still gets a rate below the market. And sometimes that's what it takes for that transaction to pencil. So that's the role that we play.
Yeah, and it's not always about pricing either. So that's, I think, an important thing to understand. There are instances where a project comes to us, to my bank, and the pricing works, the deal pencils, but we're like, there's just some piece of this that's too risky. Maybe it's not the founder, the sponsor of the loan is not well established. They don't have a great track record. Not that they have a bad track record, just limited. So those are instances where we also talk to partners like a Green Bank or others, and we say, hey, this is in your market. What can you do to help us with, and we'll do what we refer to in lending as a credit enhancement. That could be something like what we call a loan loss reserve, meaning, Rokas and other organizations like kids do this. We'll say, we're doing a loan for $5 million, and they'll say, well, we'll provide a 10% loan loss reserve, meaning we'll cover the first 10% of potential losses on that loan. Well, is that enough of an incentive for you to now make that loan to that customer? And in a lot of cases, it is. The default rates, banks can fail very quickly with about a 2 to 3% loss rate. So a 5 or 10% loan loss reserve is pretty substantial. We'd have to do a really, really bad job at what we do to be unsuccessful with that level of loan loss reserve in place in a lot of cases. So that is enough to move the needle. The beauty of something like that, like a loan loss reserve, is a great example. That money only gets used if something goes wrong with the deal, right? If the customer pays as agreed and the project performs, that loan loss reserve, that capital can be recycled. There was no money spent. It was just reserved for a period of time for the life of that loan. And these project-based loans we're talking about, this isn't like your home loan that's 30 years. These are like, anywhere from 4 to 7 year loans on average on the commercial side. So that money is able to be recycled. There's other things that we do. We've done the loan loss reserve. We've done what we call forgivable loans or rebates. So maybe the project makes sense at $3 million, not $5 million. Is there something we can do to subsidize that cost down? Sometimes we can do it through different rebate programs, taking advantage of tax incentives that still, those exist today, tax credits in the renewable energy market. It's much easier to transfer and sell those tax credits today too. So there's a secondary market where you can kind of monetize the tax credits that you create by doing renewable energy projects. A lot of times what people just need are resources. And that's what we find in that, what we call like the middle market space, where it's bigger than just a business putting solar on their rooftop, but it's smaller than a utility scale, 100-acre solar project. It's that in-between stuff that really needs a lot of help, because you're stepping up to something that's a little bit more complex, but you don't have all of the resources that Fortune 500 level utility company or some solar developer, that's been doing this for 20 years has. And that's where it requires a bank like us who's open to doing these things, and partnership with non-bank lenders, green banks, and others who could help us to enhance the credit to make that a little more attainable for a wider range of people.
All right. Our next question is, emerging markets present huge potential for climate solutions. How can Green Bank help new businesses in these regions capitalize on opportunities and drive innovation that benefits both local communities and global climate?
I think most of what we focus on, we're a 3.5-year-old company, and so if we're really focused domestic, I don't know, we touch on emerging markets a lot. Rokas, same with you guys, or
So, from a future perspective, are there plans focus on emerging markets?
more through partnership and idea sharing. So, as an example, Climate First Bank, there's a global organization called the GABB, the Global Alliance for Banking on Values, which is a consortium of banks around the world who are focused on a mission beyond purely profit, right? So we're focused on what we can do for planet people. We still need to be profitable to survive as a business. But we realize that there's more to it than that. We can be successful financially. In fact, what we've seen is we can be more successful financially by doing what's right for planet and people. So if you go back to 2009, we're the fastest growing bank that started in America in the last 17 years. It's been about 90 banks that have started new startups in the U.S. And we attribute that to our mission. People gravitate towards us because they care about what their money is doing in the bank, and they want to put their money in a bank that they know it is doing good things for the world, and isn't funding extractive industries or isn't funding things that are damaging to society, damaging to people, and predatory. So I think that's really an important distinction, something that's key for people to understand.
Thank you for that. As climate innovations evolve, how can greenbacks effectively measure their impact and ensure they're helping create long-lasting positive change?
Probably both talk about this, but impact measurement is huge, and it's also like I'd say a messy area right now, because there's still a lack of clear standardization and of system integration. So we all have different ways of tracking. The calculations are somewhat standardized, but not perfect. But impact measurement is important for us as a for-profit institution for two reasons. One, to tell our story is really the key one, but we're telling our story to different parties in different ways. So we have to tell that story to our customers, who again, they're banking with us, expecting us to do things and do things authentically. We have to tell that story to regulators, because we're constantly battling with regulators who are like, how can you be financially sound and also focused on all this other stuff? And we have to show them that you can do both, and you can do it really well. And then we also have to do the same thing with investors, because investors look at us and we have, I would say it's an even split where people have invested in our bank because they're bought into the mission. They love it. And then we have others who are just like, hey, you guys are just like a really rapid growth bank and you want to make a bunch of money, and so we're going to invest with you. We have to explain that story to them, and impact measurement is, one of the key ways we can do it, because it is quantitative. Everything can be interpreted, everything can be manipulated, but it is one of the purest, numeric ways that we can, data-driven ways that we can tell that story of impact. We've just recently invested in a software integration that we saw a lot of other peers, not even peers, but some pure banks, but also like some green banks and some others that are in the space in general were starting to invest in this same solution. And one of the reasons we did that was one, the hope of standardization. And also we saw that they were integrating really well with some of the reporting requirements that will be required under the Inflation Reduction Act, the GGRF funding, which we're still optimistic will be coming out. It's slowed down, but there's people fighting really hard for that. And we're still working, on the premise that those funds are going to roll out eventually, and we need to have the proper reporting in place. And I think Rokas, your team, has been in that while.
Yeah. And, just to add to the impact, if there's no impact, then, as a Montgomery County Green Bank, truly a not-for-profit organization, we can't touch the greenbacks, right? It has to be an impact. And, and we do all kind of financing from renewables to, new construction, affordable housing, anything that relates to energy efficiency, resilience. So, sometimes we have developers coming to us and saying, hey, we're building this property. Can you guys finance it? It's going to be green. We're like, okay, well, what does that mean? No, it's going to be good. Well, we're going to have, green roof, new HVACs, that are very energy efficient, blah, blah, blah. It was like, all right, but how much is it above the code? And we were like, well, it meets the code. So Montgomery County has like very strict energy code. So when you build a new property at Montgomery County, it's already very energy efficient. It's very strict. So, well, meeting the code, then it was like, we can't help you. You have to exceed the code if you want our cheap cabins, because we're looking for additionality. We'll give you our cheap capital, we'll help with the financing, but then you need to be 3%, 5% above the code. What does that mean, right? Maybe you add solar, maybe you have your garage that is gonna be EV ready. But give us some additionality, right? Plant some trees. It's like, let's look at some resilient measures. So the bigger the impact, the lower the rates that they get from us, and that's the impact. I mean, it's all about the impact.
Thank you for that. Our final question. In coming years, what exciting trends in climate innovation do you think will shape the future of business?
Having green banks be at the forefront of this evaluation.
Trends. Okay, so some of the stuff is really tricky because one of the things I was talking with someone right before this about AI, and AI is like a really interesting topic around climate, right? Because there is it can be used as a tool to do so much good that it can to advance some of the progress and create efficiencies and work with unlimited teams that don't have the ability to add more people always because of financial limitations. And then at the same time, you look at just the energy suck that it's going to create, and that's a really difficult problem to solve and to address. We're seeing that a lot right now with demand for we love, because we'll talk about all day how there's so much demand for these large scale solar energy projects in remote areas or battery storage systems. We're doing a bunch of battery storage right now, but a lot of that demand is driven by explosion of data centers. So it's one of these things where it's, it can be debated one way or the other, but I feel like, ultimately we're going to take some steps back to hopefully continue to take steps forward. The challenge is not letting greed overcome mission. And I think that's the piece that can be really dangerous. You have human nature coming into play, which is a really hard thing to overcome sometimes. That's where for us, at least, we continue to try and work with organizations, people, founders who we feel are authentically aligned with the same values that we have around people and around climate, and how we can be more resilient. technology in general, I think is, continuing to become more efficient. And not just, when I say technology, I'm talking about like software necessarily, but just, in the solar space, battery storage space, um, finding ways to not only create technologies that perform better and more efficiently, but also that are reusable, can be recycled. I think batteries, I hope we continue to see some more innovation in the battery sector. We started to see a good bit in solar. But people that like to, you know, discredit solar or whatever, we'll talk about, well, what happens to the panels in 30 years or 40 years when they reach the end of life and they land up in the landfill. And just as an example, so talking about startups, we actually just funded a startup about a year and a half ago in Florida, in Jacksonville, Florida, that is recycling solar panels. And so they're getting, as panels are damaged, it happens a lot in Florida with hurricanes and stuff. Panels are damaged in some of these solar farms. They're able to take those, remanufacture them, and sell those back at a pretty good rate compared to new panels to solar installers, contractors in the market. We've seen that team grow pretty considerably over the last year. They've already tripled their staff, so created new jobs in the market, and then created a way to address that problem. I hope that we continue to see more of that. I think that, uh, continuous innovation around how to make the solutions, the equipment itself, both more efficient and more sustainable are going to be the key technology, areas that I hope we see more innovation in.
I think the climate finance as a whole is very innovative. And you got, two organizations here that are extremely innovative. And for us at Montgomery County Green Bank, we are always looking for private capital, and Climate First Ag was just been amazing. We have a couple different pilots going that are extremely successful. For example, if you live in Montgomery County and you own a residential home in equity emphasis area, through our partnership, you can get a 0% interest solar loan. What is it, 30 years?
Yeah, 30-year loan.
Non-dealer fees, right?
No fees, yeah. And what we've seen, which is really cool with that program, is like we started it thinking about, well, this is a way to provide solar to people in the communities that have been historically disadvantaged. But what we also found, because that product that we offer also includes the cost of roof replacement, is people are also taking advantage of it for that reason. There's homes that were desperately in need of a new roof, and even be able to help a low-income homeowner by giving a full roof replacement, and then also to help them to stabilize their energy costs over the lifetime of their home. It could be life-changing for people. And couldn't have done it without partnership with Montgomery County Green Bank, because we couldn't afford to offer a 0% interest rate without that partnership.
All right. Thank you, Rokas and Chris. We'll turn to audience if they have any questions for our panelists.
With respect to that facility you're talking about on funding rooftop solar, are you work with other tax equity partners to achieve that purple trade? Where is the value to your rate? So that's the
In the zero, so with the solar program in Montgomery County, if you're in the equity emphasis areas, they get a 0% rate. Everyone else gets a 4.99 rate in that market. So there's still, some interest savings there. But the way that we're able to do that is through Montgomery County Green Bank. They're subsidizing that rate. So the bank is still making money on interest rates for those loans. That money is just not coming from the homeowner. To the question around tax equity, it's not something that you're able to do, unfortunately, in this instance, because the homeowner owns their solar. We're not leasing it to them. It's not a third-party ownership model, so you don't have in the tax credit world for solar. If it's a commercial project or a third-party owned project, you do have the ability to transfer the tax credit or to utilize a tax equity partner. But in these instances, you don't. At the same time, I think it's sometimes a misconception that a low income, a low to moderate income homeowner can monetize the tax credit. It just can't always be done in full in year one. The difference between us and a lot of other lenders in the solar space is most of the other lenders, the way that they position the solar loan is they give a consumer a price based on a full monetization of the tax credit at the end of year one. And then when that doesn't happen, because they are a lower income homeowner who can't monetize it fully, their payment spikes up considerably. And that's the predatory part of the consumer solar lending space that's been in the news and given it a really bad name. And that's exactly what we are trying to fight against by having a program that doesn't rely on those incentives to help people.
All right, our next question, gentleman in the fourth row.
Hi, two questions. First question is, which technology or business model do you guys love the most? Which is the most bankable? Which your credit risk guys just kind of, stamp right away? Like, what's those transactions that can't get enough of? Second question is, given the uncertain future, are you guys feel like you'll be for each bank deploying the same amount of money, less or more credit going into the future?
Yeah, so I'll start with the first one for us. It's a boring answer, but it's the answer is we like the really boring. The easiest steps to improve is the really boring step. It's the tried and true business models that have been around and that are very predictable. If we're talking specifically about renewable energy, it's the solar finance models that are out there that don't rely heavily on brand new incentive programs. Relying on the tax credit programs, sure, totally cool. Relying on things like renewable energy credits, SRECs, buying, there is a secondary market in place where we know how to monetize those things and stabilize their prices. So we're really comfortable with things like that, just as they've always existed. The second part of your question, I'm sorry.
Your future outlook,
Oh, yeah.
you're deploying more or less, or it's
Right now we're deploying a lot. And I think that's because everybody's afraid that all the tax credits are going to go away.
Yeah.
So right now everybody's going crazy. People bought a bunch of inventory because the tariffs weren't in place yet, but they might be coming in. This kind of stuff going on. I keep watching the news, and I have to watch it. It's depressing and it's demoralizing. We started our bank before the Inflation Reduction Act was being discussed. We built our bank on the principle of creating loan programs that were attainable and affordable to people, independent of the one big subsidy we did have at the time, which is the investment tax credit on solar. The IRA passed, and we were really excited. And of course, we leaned into all the opportunity that was going to create, and we still continue to, look at ways that we could pursue those opportunities. But we're not, our existence is not based on that. Better or for worse, we've been dealing with, climate denying executive branch in Florida for years. So this unfortunately was nothing new to us at the federal level. So we're kind of used to it. I hate to say it. That's the truth. I look at the programs that we've done with Montgomery County Green Bank and some of our other Green Bank partners around the country. Not a penny of that money has come from the IRA or Solar for All or any of those sources. If it did, it would be wonderful because it would allow us to do so much more for a wider range of socioeconomic status, levels across the country. But without it, we're going to find a way. And we're going to continue to do what we're doing. So I think we're going to continue to see growth because people are realizing that these renewable energy solutions are affordable, they're efficient, they're becoming the more desirable way to deliver energy and solve the energy problem in America. So I think it will continue.
I mean, it saves money too, right? For solar. So it's like people are gonna stop investing with it because it does save money, right? It should be no brainer for having energy efficiency and renewables. And we see the same in the app. As a small countrywide green bank, we have $500 million in the pipeline in new projects, and we just need bulk capital to deploy.
Yeah, I was wondering about the technology providers that you work with. So if someone comes to you and they want a solar system for their home, are there specific
like off the shelf ones that you dictate, or like how open are you to new technologies? You mentioned something with the EVs for the electrification of the truck.
So we definitely want to qualify the contractors, third-party partners and vendors that our customers are going to use for two reasons. One, we don't want them to get ripped off. And two, we want the quality of the work to be good because, that's our collateral. Today we have at our bank just over 600 solar contractors, companies that we work with across the country, and continue to grow that number every day. That's what Bemis team does, and they add 20 to 30 new installer partners every month. And one of the ways that happens a lot of the time when we get a solar loan referral, it's coming from one of our partner contractors talking with a customer, bringing it to us. However, sometimes someone finds our website and they apply for a loan and they're like, "Hey, I got a quote from ABC installer in Missouri, and we haven't worked with them yet." So that's great for us. We love it because that we have an opportunity to add them to our network. And we're going to vet them. So we're going to look at their history. We're going to make sure that they're insured. You continue to stay insured, that they have a good public complaint histories. Look at some, I think, public, LexisNexis. So public record checking. Verify how many years they've been in business. Sometimes if things are a little sketchy, maybe collect financials and things like that. So we do some qualification to protect the consumer and protect our bank's investment. But we are always welcoming the opportunity to add vendors to that list.
Hi, I'm just in a word on the do you see vesture, so defense and commercial. So given today's environment, this might be heresy. I don't know if you have thought about talking to the experts. Is there actually very, very interesting energy efficiency? It's a considered efficient critical area. And then there's also the space company. For example, I'm working with a company that's they're harvesting sunlight, solar power in space, and they want to beam it down to Earth, to solar panel. So imagine 24/7 the energy, 3.6, free and apological constellation. So I think there's some overlaps between what climate investors are interested in and what's critical to national security, and there are definitely areas of collaboration, or at least another source of funding for climate startups. So it's something to think about.
Yeah, absolutely. I would say I think it's a positive thing that there are federal government agencies that are looking at renewable energy as a solution in general. And we've worked with other government agencies before through contractors to support their solar energy needs.
And just to add one more thing, you were talking about measuring hot viral results. UP uses space data to measure emissions to mass carbon footprint, to do carbon footprint mappings. There's so many overlaps, so it's definitely where it has to be they borrow.
That's interesting. I'll check it out.
All right, and next and final question for the panel. Oh no, my question isn't meant to be that. I guess basically, why do the programs, what are some of the factors of why programs fail that you invest in?
Programs, I mean, like the things that we...
The pilot programs and I got the idea about localization and stuff like that, and it sounds like you have a lot of things, but why do programs not sure they impact the...
You had one. I mean, it's everything that we do is pretty innovative, right? So we, for example, as a green bank in Montgomery County, we are not allowed to do consumer loans, right? We allow a reward with the partner, to do credit enhancements, kind of in the back end. But we need a partner, either profit, a first bank, or someone to actually do those consumer loans. Prior to this partnership that we have with Climate First Bank, do work with many other credit unions and nonprofits, and a lot of those programs failed. One, because the partners really were just kind of doing cookie cutter things in a specific market, and just the volume was not there. when we sat down with the Climate First Bank, they kind of really saw the opportunity. They wanted to get into the whole state of Maryland for one, right? Montgomery County is one of the most progressive counties in the country, especially in the state of Maryland. Yeah, we have this innovative green bank. What a great partnership, right? So we had those kind of discussions but we had many partnerships that didn't work. And I was like, how confident you are that you can do these, 50 transactions a month, for us to be worthwhile to investing and, and then building this program out. And
Yeah, I would say it's exactly right. So that it works, and it worked because we were going to force it to work no matter what, and that required FEMA to fly up here every week for a little while and visit solar installers in their offices and train them on using our systems. A lot of times what happens in these partnerships is you have a large national partner who's way bigger than us and probably knows way more about solar finance than we know. But they just try and take their platform and insert it into this local community, and that doesn't work. And especially when you're trying to support low income and disadvantaged community members in the market, there is understandably a distrust of institutional finance because it's been screwing them over for their entire life. So you're not going to build trust by knocking on doors and being like, hey, we're going to give you a 0% loan, because they're like, that sounds like, doesn't sound real. And so you have to build that trust through different avenues, and that means engaging with the right community partners and the people who are the centers of influence within those communities. We've done some stuff in markets in Florida where that partner becomes a local community center or a church or something like that. And that's like not the typical path for a bank. So you have to ring the bell a little bit differently if you're really trying to influence change in the local market. I think things fail when people try to take a very localized problem and use a global solution to it.
Okay. All right. Thank you so much, everyone, for your lovely questions. And thank you, Rokas, Chris, for an insightful discussion.